24 hours, we might get the new U.S. president.
Yeah.
It might be Joe Biden. It might be Donald Trump 2.0. The consensus, though, when it comes to, I think, where we are, this part of the world, and one of your biggest markets, Greater China, is the core position does not change. What's the assumption from an operating perspective? Do you think the tensions escalate? Do they taper down? And how do you manage that?
Yeah, I think our expectation is consistent with your conclusion, which is that the tensions will remain. For better or for worse, both the Republican and the Democrats, and across each of those parties, there's not divides within the parties, have been pretty critical of China. And I think that the signals out of China is that they also don't see a big difference in the case of a Biden win. With or without also a switch in the party that's running the Senate. So what I would expect, though, is that Biden would take a couple of steps that would be different should he ultimately win. One is I think there would be an element of engagement that's been lacking, and probably consistency of engagement. Two, I think that Biden is likely to try to rebuild some of the international alliances that have become frayed over the past 4 years, and whether that's with Europeans or with Japan and Korea, which, of course, are in many cases actually in quite good shape, but in others there's visible signs of strain. Perhaps he would reconsider participation in the Asian trade agreements, for example, which would be probably helpful from the U.S. perspective in terms of creating a more common front, and could be problematic if that common front was used in order to try to leverage position into China. But look, I'm an optimist. My hope would be that with an element of engagement, that China and the U.S. would begin to act on what they both recognize to be the underlying case, which is that the world and each country is better off cooperating rather than purely competing. But we don't think the competition is going to go away completely either.
It is something that will likely remain a strategic rivalry here. Just to pivot again, just to talk about your bank. I mean, you guys have talked extensively about how you've managed to shore up a fair amount of cash. You probably know where I'm going with this, buybacks and dividends. And obviously the market's abuzz. Are you guys going to do it? I know that's a regulatory, there's a function of a regulatory framework there as well. Is that the only thing that's holding you back from either buying back stock or giving a dividend? Is it simply the regulator?
Look, this is always a board decision, and I would never preempt the discussion that we'll have if we're able to at the board, which won't happen until the early part of next year as a practical matter. And of course, by that time, we'll know what our full year earnings look like. We'll have a much better read, I think, on how the quite substantial expected credit loss reserves that we've taken, which haven't materialized in losses. A little bit has. But for the most part, we've taken precautionary reserves, including management overlays on top of what the models would suggest. And we did that because it's a highly uncertain environment. Now, I'd say the early indications, as we start with China and Hong Kong and Singapore and other Asian markets, which are clearly in the recovery mode, not complete recovery. There's still very, very little tourism, et cetera, but clearly recovering. And the loan delinquencies that we saw increase in the early stage of the pandemic have come right back down. So that's encouraging. Other countries in ASEAN, Malaysia, and in different ways, India, have had payment holidays which have come off to one degree or other. Also, early signs are encouraging that customers are able to get current again on their outstanding debt. So, if that turns into the prevalent outcome, then we'll say, okay, well, we were cautious in terms of loan impairments. That was an appropriate thing to do. We remain very well capitalized. Okay. So we look at earnings, we'll look at capital position, we'll look at liquidity, all of which look okay right now, which is why we said we would like to consider resuming distributions in the early part of next year, subject to regulatory approval.
And very quickly, just all indications point to the fact that impairments are continuing to go down?
I wouldn't say impairments are going down. I mean, our loan impairment number has gone up, but they've come down from the first quarter to the second quarter to the third quarter.
Yes.
And I would say where we took a cautious stance in terms of what the future losses could be, the early data points that are coming in suggest that it was in fact cautious. But it's early days, so we'll see how this thing really settles out. Obviously, we're getting into now this second phase of major lockdown in Europe. Who knows what's going to happen in the U.S. First at the election level, but then if Biden wins, is he going to take a different approach to Trump? Well, I'm sure the answer to that is yes, but how much of a difference will that make as those policies get rolled out state to state? Will it have a global economic impact, and will it affect the GDP in China and Hong Kong and India? Those are the kinds of things that we may have a better read on by early next year.
Speaking of next year, and we have time for one more question. 6th year at the bank next year. You probably know where I'm going with this. Succession planning?
Yeah.
Do you want to stay?
Look, I said from the beginning, I want to get this job done. Now, we've definitely taken a setback with the pandemic. Zero interest rates hurts the bank, and it hurts Standard Chartered. So it's set back the time frame on which we can hit the financial targets that we had set out, which we have acknowledged. The underlying progress is as good as it's been at any point in the last 5 years. So I feel very good about our ability to deliver on the commitments that we've made. And I feel very good about the actions that we're taking to continue to grow our cross-border business with multinational corporations and to continue to develop our business with affluent customers. And back to the core of this discussion is to continue to digitize everything that we do in a really differentiated way that adds real value. So my view is if we can keep on doing those things, we'll deliver the package at the end of the day, although inevitably it's going to take a bit longer in this environment.